Okay, I guess you are it. Well, that's been a little podium be back here in the middle of the room. If sit back or not. Julio didn't see him in calls this morning. Tanda, she wasn't called, so they probably won't be here. And let's see, there's Tracy and Kevin and Alex, Tracy. Anyway, it's about got them. Tomorrow night, I saw Jessica out there. Definitely need everybody out tomorrow night. I'll probably text everybody because Julio's not here. Alex and Tracy don't do PITA anyway. We got about 46 scheduled for tomorrow night. We scheduled about 36. That's 3 hours. It's 12 an hour, it's 6 every half hour. But now we're gonna be about 8 every half hour. So we'll have to step it up. But your experience now, you can handle it. Also, you sure you don't want to do some more? You sure? Okay. You do it by a year out, right? So, you know, how much snow do you have?
I still have one here. I don't think I have more than maybe 20, something like that.
20 inches?
Oh, you meant inch. I thought you were talking about, never mind. No, you're talking about snow, right?
Yeah, what were you talking about?
I thought you were talking about clients, because you asked him if he wanted to come tomorrow and do any more, and I was like, no, we got like 15.5 in virtual work.
15.5. We'll do it also. Lydia? Robert? Well, that's what it turned the rain down my way. It must not turn rain up here. I just got 3.5 inches. It's it. But next day and yesterday. On Sunday, pretty much all gone. It's all about yesterday. I come up here this morning, I found up 3 feet along the side of the highway. Park lots here and piled up side of the road. Oh, well, funny time is, this Friday is Good Friday. A lot of gardeners and farmers believe Good Friday is the day of planting. Like planting potatoes and onions, carrots and lettuce. And it may not be this Friday. Calls up and do the wet. So, anyway, we'll do a test, folks. We're going to have a test Thursday. If I can get one made right now, I'm locked down on my computer. I've tried to put in the password 2 or 3 times. They must have asked me to reset it, and I didn't. So I have to call and get that done. But it'll be the same type test, and hopefully I'll have it ready by Thursday. And this will be in class. Okay, no take home. But these 3 chapters, I think you're okay on them. It's like kind of exchanges. It's that 1231 and 45 property transactions. And I don't know what chapter 11 was. It might have been cash versus accrual method and inventory. So did we look at all the problems we needed to in chapter 13? I thought we looked at a few of those. So let's look at the end of chapter 13. We've got to wrap those up and get on to corporations and forever leave personal taxes. Now, before we do that, though, we're supposed to have a couple of problems. Some people did not hand in problem 56 from chapter 12. Anybody else have problem 56, chapter 12? Okay, I've got Austin, I've got Olivia, I've got Robert. Problem 56. First. Make sure it fits six. Robert, that should be Donna Hart. Now, we got another problem that I wanted to do for today. What was that? Thank you. Here that is. Kevin, you didn't owe me problem 56, did you?
Yeah, I got it.
Can you email me yours? All right, now what problem do I want? Chapter what?
13,
Chapter 13, problem what?
68,
What?
68.
Problem 60. Everybody got their thing on to a minute. Kevin, you got your problem 68? All right, let's go back to chapter 12 just for a minute. Now, I know I don't have these probably on solutions. Let's go back to chapter 12, problem 56. All right, I'm just going to glance at this a little bit with you. I know I have your problems, so go to page 31 and go to problem 56, chapter 12. All right, I'm just going to read down through there and see if there's any pointers. Okay, she made her house in California. She sold her house for $500,000. She paid $14,000 commission. The house was acquired on March 23rd, 89 for. Now, on this house, first off, is Donna Hart married? What?
Single.
I've got single on Olivia's here. Okay, she's single. Now, on this house, she sold it for how much?
500,000.
All right, you subtract the commission, so she realized how much? She realized 486,000. Now she paid how much for the house?
140,000.
All right, did you have a gain of how much? 300 what? 380? 346? Did you have 346? If I'm calculating right, subtract 250 from that, she's forgiven of, should be taxed on 96,000. Now, where did you put that? Did you put that on a 2119? I should have told you what form. Let me see where Olivia put it. Olivia put it on Schedule D, which is okay. It's going to end up there anyway. But I should have told you that goes on a Schedule 2119. Now, Olivia's got to 500,000, 154, and the cost of other bases, and she's got the 250 exempt adjustments, and Olivia's got 96,000. So Olivia has got the right amount that will be taxed. 96,000. Hopefully, all of you got that. Now, going on down, salary from Faro and Okela, 100,000. Now, Olivia has 100,000. Federal income tax withheld, she put that down. From both at 28,000. FICA tax. Interest income from Sun Bank, 1,800. Libby has it down in the right place. Dividend income, 10,000. She has it in the right place. Both of those should be on Schedule AB, though. All right, and on line 13, she has capital gain of 96,000. Okay. Interest paid for mortgage. I'm going to go over and see if she is doing the right itemized deductions. All right. Interest paid for mortgage. Libby, where did you get your figures on this interest? Where did you get your figures for your interest paid on mortgage? Maybe that's taxes. All right, what did somebody else get interest paid on mortgage? I'm gonna grab one more return here. This would be Kevin's. Kevin, did you not itemize? No, I don't think you itemized for it. This looks like Austin's. I don't think Austin did. I think Austin just sent her to jail. Make sure we look the same. Oh, let's see. I'm trying to look at itemized deductions, folks. Now, I was going along good with yours, Olivia, to that. Now I'm stuck with you on itemized deductions. How much taxes did it say she paid on? Not FICA taxes. 4,100. There was state income tax. How much state income tax? $2,900. How much dividends? 10,000. $7 million. Help me out here. Match up the tax and the interest. I don't know if you do this another fault or something in your fault or another fault, but anyway.
So what was the home mortgage?
How much was the what?
So how much would it have been?
What it says. All right, let's see. Interest income, 1,800. Dividend income 10, and you put that on the Schedule B, I guess. Interest paid for mortgage, 67,800 and 3,800. She could deduct both of those, which would be 10,580. All right, property taxes she paid 4,100, and then state income tax she paid 2,900. Now, sales tax paid in California and Florida, you don't get to take both. You get to take your state income tax or your sales tax. So if you took the 3125, that would be okay. Now, I don't know what that total itemized deduction would be. Determine the amount of the recognized gain or loss on the sale of the resident, which we did. Due forms 1040, Schedule A, B, and D. And then it says also due 3903. She moved 3903. She paid some more interest up here too. Now you can claim those points of 3,400 as interest also. All right, those property taxes were prorated, so we could only take the prorated part, 3,950. And you can take the 3,600. So be careful on the property taxes. All right. Now, how about the moving? An 8960. What is a Form 8960? What is it?
Net investment income tax.
The what?
Net investment income tax.
All right. That wasn't alternative minimum tax, was it? Let's see.
It just says the net investment income tax for individuals, estates, and trusts.
Yeah, but she didn't have enough to have to do that form. But how about that moving expense? Do we have her moving expenses? How much did it say her moving expenses were? She paid travel and lodging costs of $370 and $100 for meals. Her household goods was $23.50. So you should have done a moving expense. And you should have had an adjustment. Now, Kevin, I'm looking at Kevin's. I see no adjustments down here in this space. All right. So Kevin, something's wrong there. Maybe two things wrong. Let's see what somebody else may have had there. All right. Now Austin has one adjustment. Moving expense of $2,700. All right. Maybe that's all she had. So how much moving expenses was 27? Okay, Austin had the 2,700. Now maybe that's the only one. I was thinking about her being self-employed, but she was not self-employed, was she? Okay. So just pick up those little things. Kevin left off moving expenses. And Olivia had some kind of nightmare, came up with what's wrong numbers for itemized deductions. Done from another problem or something. Okay, now the problem at hand. 13 what? 13 what?
68.
68. I know it won't be on here. There's supposed to be an instructor resources. Tax strategy problem. See, All right, say it, see instructions resource manual, you go get it, and it's not ready to download. So, let's take problem 68, look at what you've got. Let me find it first. All right, Hernandez is single and has no dependents. She operates a dairy farm and you got her information. Schedule C was prepared by her accountant and the net profit from the dairy business is 48. So you don't have to do her Schedule C. Itemized deductions, they gave you the whole amount. Dividend, any income they gave you. State income tax refund received during the year is. She did not itemize last year, so you ignore that $125. In June, a burglar broke into her house and stole the following. That is a casualty loss. You could add that on to her itemized deductions, I guess. Now, the burglar sold a painting, $2,000, and a sculpture base of the 17. Well, the insurance proceeds is $9,000, so she's not going to have a casualty loss, okay? She has no casualty loss, but she has a gain. She has a gain of $3,700 from $9,000. Now, the following assets were used in her business were sold. All right. Original cost $25,000, depreciation $25,000. Selling price $8,300. That $8,300 is all section 1245 ordinary income. On the born, we'd had to use that straight line depreciation to go back and find out the difference. So I don't know what it would be on the born. She sold it for $87, and I don't think all of that would be a gain. Okay, the land, that's just a $12,000 straight out, section 1231, long-term capital gain. And the cows, they depreciated them $7,000, they sold them for $21,000. $13,000 would be ordinary income, section 1245, and $1,000 would be section 1231, long-term capital gain. But I'd have to go back and calculate on that born. So you had to be careful, calculate straight line depreciation on the barn, then subtract it from the gain. In August, 3 acres of farm were taken by the state under the right of eminent domain. The base of 3 acres was $1,500, and the state paid the fair market value of $22,000. The farm was purchased in August of 1286. None recaptured section 1231 losses from the 5 most recent tax year are $7,000, which you can use. Estimated taxes paid was $32,000, which you could use. For Form 1040, casualty loss, 4797, and D. These are good practice. That's where I miss an overhead to put these forms up. And I don't know why they shouldn't be able to connect overhead to this room. Now, Kevin, what was your final answer on this problem? Okay, now this was chapter 13. Did you do it?
Yeah, actually,
Oh, is it over here?
yeah.
Kevin, you didn't mark 56 on it, did you? This must be it. Caleb, you got it? What's your final answer on it? Your final answer, Caleb. Either a refund or pay. How much have you got? You got to pay it or get a refund? All right, Kevin's got a refund of 111. What do you got? Refund of 111? Have you ever did what you did?
No.
Awesome.
Well,
No, they may be well. What do you do?
well, I'm pretty sure I messed up.
Lydia? 122? And Robert? 31? Oh, 121, 127, 111. All close. The only thing that should have really messed anybody up would have been the depreciation on the bill. Yeah. They're really close on it. And how you handle, you have to do a cash loss. You didn't have to do it. You wouldn't have to do it. That's okay. Okay, I will take this up. 4797. Got to place all programs with this one. On back. I'm gonna look at all of them back. No. Didn't put any of them on back. One, couldn't put back. Still may go back and do this walk together. I can bring it up and save it on some driving short class. Okay, so we all differ on those type problems. All right, as far as I'm concerned, then we have finished chapters 11, 12, and 13. We did look at some problems, didn't we, in chapter 13? Did we look at a few problems? Yeah, I know I've got 33 marked and 39 and 41, 44. Now, I don't have any since 44, so let's go to page 32 just for a few moments. All right, I want us to go to problem 45. Like-kind exchanges on section 1245 property. 1245 property is recapture or depreciation. Keep that in mind. And I want to look at the answers to section 1245. That way I won't be putting anybody on the spot. Leroy owns a truck used in a trader business that costs $50,000 and has an adjusted basis of 34. Sure, he's got a 16,000 gain. It's exchanged for a new truck that is like-kind property with a fair market value of 40. He can do that. Prior to selling the new truck 2 years later, Leroy is allowed depreciation of 13 for the new truck. Now, he had a $50,000 truck at an adjusted basis of 34. He exchanged it for the new truck that is like-kind property. You keep 34 as your basis. He depreciated 13 more. 13 from 4 to 34 is how much? 21. It cost basis 21. Now, how much did he sell it for? Realized gain on the exchange. All right, look at that. Realized gain, 6,000, sure. But how about recognized gain? 0. How about basis? 34. And All right. What was D? Recognized gain and the character of the gain if the sales price of the truck is 41. I told you the basis was 34 minus 13. The basis is 21. And if you sell it for 41, your gain is 20. Ordinary, because it's recaptured depreciation. Now here, if you sold it for 52, your gain is 31. All right, recaptured depreciation is just 29. 31, 29 makes 60. All right. But you sold it above and beyond that. So you do have 2,000 long-term capital gain, section 1231 property. Now that was a good little problem. It's straightforward. It tells you everything the way it should be. Okay. I want you to read number 47. Take a minute and read that. All right, section 1231 and 50. We need to look at that 50 a little bit. For property placed in service for 481. Charles owns an office building and land that are used in the trade or business. The office building and land acquired in 78 for 80 and 100. During the current year, the properties are sold for 900,000 with 20% of the selling price allocated to the land. All right, 20% of 900,000 is 180,000. Land basis 100. You should have an 80,000 gain. All right, the building had accumulated depreciation of 690, so its base was really 110. And the land, of course, remained same, basis is 100. Now you sold these for 900, and if 180 of it, so 720 would be for the building. All right, now if your bases in the building were 110 and your sales price was 780, that's 80% of 900,000. The answer to A is 610. That's okay. But B part, was the character of the recognized gain due to the sale of the building? All right, now look at this. We would think it would be 610,000. All right, but look at this. 130 is section 1250, ordinary income, and 480 is section 1231. You're going to take 480 of that and make it a long-term capital gain, and it gives you a big break. But why do we get this 560,000? The 480,000 gain is unrecaptured. Section 1231, gain taxed at a rate of 25%. And we know this is the build of long-term gain C, but I'm worried about B. All right. All right. Did they work that out in any way? How do you get that figure, Kevin?
They give it to you.
Oh, they do?
Yeah.
Well, I guess that makes sense. So straight line depreciation would have been, what, 560?
Yeah.
So that leaves you 130, which is section 1250. And the 480 is section 1231 gain. Okay, so you can calculate that straight line. But to get you familiar a little bit with 1250, I want you to do problem 53 and 59, 53 and 59 for homework. And please have those completed. And I don't see the sellable resident. Okay, that will bring us up to date on these 3 chapters. And 68 and 68, Kevin, did they give you the straight line depreciation on that building? I may have overlooked it. Did they give it to you? If they didn't, we need to be able to calculate it. So we can go back and look at it. All right, folks, after Thursday, we're telling personal taxes goodbye. And, well, you're an expert? No. Will you ever be 100% expert? No. If anybody advertises they're an expert in taxes, you should sue them and take them to court. Okay? I have taught taxes for a lot of years, over 40. I have taken updated seminars in taxes at Virginia Tech. I have had the class on partnerships and corporations, plus personal. I have passed enroll agent tests on personal and business. Yet I don't think I'm an expert. I had a tax office for many years, and I still have some of those clients to this day. But I've had tax clients for over 40 years, different situations, and I'm still not an expert. But I know what I should question. If I don't know it 100%, then I'll look it up. And that's part of taxes, being able to look something up. Your best source is irs.gov. And I've always told you on personal taxes, if it's a gray line on your return, take it. And argue with the IRS. You thought this was deductible because of this. So if you're doing somebody else's taxes, like VITA, and it's gray, don't take it. All right? Don't take it. That way you don't have to refix it. We've had so many we've had to refix. And a lot of them were the client's problem, not your own. Like Jessica just said, she finally got her name straightened out. A woman with a divorce had 2 kids. She used the wrong last name for one of the kids. Maybe she was with so many men, she didn't know what last name to use. But anyway, you gotta use the same last name that you used last year for the other client that returned. Put your kid's social security number front. So that's important. Get their social security number right, get their kid's social security number right, and in reviewing these returns, that's what I like for you to check. The social security number, the routing number, their account number, if they have an automatic deposit or pay. Those are important numbers. And if you get time, check their address. I don't care if you got the wrong telephone number or not. But you do need the right address or you get rejected. But there's not many numbers in an address, 2 or 3 numbers, and most of you get those correct. But Giorgio, he'd transpose some numbers on the social security number or something. It's easy to do. We all make mistakes. Okay? But the thing of it is, be able to correct it. All right, from there we went to corporate taxes, and here we must begin and get busy and get serious. All right, I want you to start working even problems in the chapter on corporations. To start off with, on corporations, once again, look in the back of your hardcover and find the corporation tax rates. Now, these are corporation tax rates for 2017. We know what is the highest tax rate now for 2018? Trying to get down to 20 or 21. Google that real quick, okay? What is the highest corporate tax rate today? I believe it's 21. Oh, different countries. The United States, according to the rates back in your book, is the highest of many countries. Also, now let's take $200,000 corporate income. Let's go ahead and take $200,000 corporate income. And find me the tax of $200,000. Go to the chart back of your book. Find me the tax of $200,000. Oh, you got your book?
Yeah, I got
Oh, you got good eyes? Reading the book on that cell phone. All right, that's one name we gotta know on corporations. All right, when you look at the back of that book, what is your taxes on the first 100,000? It tells you what's your taxes on the first 100,000. All right, are we on the right page? 22,250. Do you see that? Kayla, do you see 22,250? You see that, Kevin?
what page is that?
Huh?
What page is that?
Oh, that's in the main back of your book. I don't know how you find that on a cell phone. Liberty, you all see 22,250? Now, what is the tax up to 320,000? Well, if I subtract 100 from 200, that leaves me 100,000. And that's in a 39% tax rate, isn't it? So that's 39,000. All right. Now, when I add this together, I've got 61,250. Now, that's a lot of taxes on a corporation to make 200 and pay 61 out in taxes, isn't it? Now, what is your average tax rate? Divide 61,250 by 200. 200 is your gross income. Divide that into 61,250. Tell me what their average taxes is. 30, 200 into 61,250. Olivia? Divide 61,250 by 200. Somebody, everybody. 200,000, yeah. Olivia, 30 point what? Now that's this corporation's average tax rate. They're paying out 30.5% in taxes, but they were in a 39% marginal tax bracket because they made over 100,000. Now your best corporate rate is making under 50,000. There it was 15%. Now I don't know how the Trump tax bill will work. It may just be a straight 21 on everybody and no figuring but multiplying by 21%. All right, we're going to do one more of this, and we're going to forever leave calculating taxes. If we do a return, I expect you to be able to do it. Now, if the corporation made $500,000, what is the taxes? If the corporation made $500,000, take a minute and calculate it. Now, on the first 335,000, what is your taxes? One 13, 9 even. Well, if you only made 335,000, that'd be it. But you made 165 more than that, and that puts you in a 34% tax bracket. And what is 34% of 165,000? What have you got? How much, Robert? What'd you get, Kayla? Robert, is that what you said? All right, now the total taxes then looks like 170,000. Now divide that by 500,000 to get their average taxes. Some of your problems may ask for that, some may not. Your average taxes is how much? How much? 31? You know, some of this was taxed at 15%, some taxed at 34, some at 39. When it's all said and done, your rate still turned out to be that much because much more of your income is in the 34% bracket or 39. All right, so now you can calculate corporate taxes. Now I want you to look at a corporate form. Go to the back of your book or chapter and find the tax problems that are done. The tables was C6. How about your problems? Were they B or A? The depreciation tables was Appendix C. See if Appendix B has a corporation problem or form. All All right, look at page B50. B50. That didn't work. Yeah, okay, it'll be on B52. All right, we're going to take a minute and look at 1120. 1120 is your corporation tax return. So it's not a 1065. That's individual. I mean, 1040, 1065 is a partnership. 1120 is a corporation. Now, the first part of it, you'll find it quite easy because the first part of it is nothing but an income statement. I get tired of trying to flip these forms in that big old notebook. Now look over the first part of this form. And like I said, it's a plain old income statement. Okay, so you put down your gross receipts, your returns and allowance, you get your balance on line 1C. Now you put the cost of goods sold and you get your gross profit. And you get on down to get total income. This corporation may have had rents and royalties and other things, but their main income is up there on line 1A. All right, now where does cost of goods sold come in at? Go to page B57. B57. This is your cost of goods sold that you add on to the corporation. Page B57. Here you have inventory for the end of the year plus purchases, cost of labor, additional cost, other costs, total, inventory at the end of the year, cost of goods sold. Basically, what you've always done in accounting, beginning inventory plus purchases minus ending inventory. But I had told you before, even on a Schedule C, that you can add on labor and repairs to get that thing ready for sale. I told you if it was a used car, you may add on detail and cost of stickers and extra paint or touch up, whatever. Makes the inventory cost more. And then you get down to line 9A, you got a choice, cost, or cost of market, or FIFO or LIFO. FIFO, LIFO, or cost of market or cost. And you gotta do some check marking there if you do LIFO. All right. So now look at one of your 1040s, you're on page 852 now, or B52. Now you're down to line 11, total income, just like on the income statement. Now line 12 through 26, 29, 26, 27, 28, 26 is your deduction. Now here's some of the things you can deduct: compensation of officers, salaries and wages, repair and maintenance, bad debts, rent, taxes, interest, travel donations, food, police, advertising, long-term plans, employee benefit plans, and that production. We'll look at. Any other deduction that's not listed here is on line 26. We'll have some of those. Example, if I do a tow truck, I mean, they'll have washing fees here for a tow truck. They'll have shop supplies and things like that. Paying their hand. So, all right, now total deduction. Taxable income before net operating loss. carry over, doing special deductions, which we'll look at. Now, the front of this is an income statement, you will have no problem, okay? Now, I want you to look at B58. How much does that add up to? Compensation of your two officers, how much does that add up to? All right, now go back to the front of your 10, 11, 20. All right, I want you to look at line 13. How much is line 13? I don't know, line 13, 12 here, I mean 12.
36.
Now, line 13 is how much? That does not include the 36. Now, I do tax for one corporation, and they just give me the total salary fee. And I ask husband and wife, how much is their salary? So when they give me their salary, officer salaries, I subtract that out of their salaries, and the officer salaries I put on line 12, and the rest of it I put on 13. But do not double count. Be careful of double count. All right, now let's look at page 53. B53. B51 didn't have nothing on it. Well, hope you can find yours. I can't find mine. Kevin, what is B53? I got these out. Is there B53?
Fixed dividends.
By special deduction. B53. All right. I know I'm glad to hear you. Corporation has to pay taxes. You have to pay tax on dividends you get from corporation, 100%. But if a corporation gets dividend from another corporation, let's say Ford got dividend from GMC, then Ford gives you money, and you pay taxes on it. That way, those dividends are being taxed 2 or 3 times. So from one corporation to another, it's usually look down at line 8. Line 8. How much are you sent on those dividends? Line 8. 100%. Okay, so if you wholly own another company, you don't pay anything on their dividend. Now, some of them be in another bracket there. 80% is pretty common. Dividend for 20% or more on foreign companies. The 80% there on line 2, pretty common. Dividend from line 1 is common. So at least on line 1, you get to exempt 70% of any kind of dividend from any company. Right? Page 54. This is page 3. Find the page number of your return. Page 54 is page 3. So if you're running off the corporate return, make sure you get 4, 5, or 6 pages. All right, here, competition of payments. Here's your income tax. How to calculate that now? 10,953. Same thing on line 7, same thing on line 11. Part 2 is just like an individual. Credits, estimated tax payments. The payments 14,000. You owe 10,593. So you'll get a refund if you want. Got to put in a business code, your activity, and so forth. All right, so page 3, go to page 4. Page 4 or 56 is it? Page 56. All right, what does that look like? What does that look like, page 56? Huh? So page 4, of your return, here's page 5, supposed to be close to the subsection. All right, but a balance sheet, but it's a tricky balance sheet. Now, first off, you gotta put the beginning of the year, and you gotta put the end of the year. All right? Now, if it's a new company, you only have the end of the year, which will be beginning of the year next year. Now, your roughest line down here is probably line 24, 25. I don't like to, but I've had to plug that in within 10 or 20,000. Client didn't give me enough information. I had to plug in some retained earnings to make it balance. But don't do that. Now, hopefully, look at M1 here at the bottom. M1 is similar to retained earnings statement, but a little bit similar, not a lot. Take beginning, all right, M1, you take beginning net income, any taxes you pay, any expense recorded on the books this year and not deducted in the return, you come up with line 6, I guess. All right, and then you've got to go to the right side, income recorded on the books this year, on including this return. So that's different between your book income and your taxable income is M1. Your M2 is something like you did in accounting with a retained earnings statement. You take book in and retained earnings, and you add income, and you subtract out dividends, and you've got ending retained earnings. So in M2, you've done the retained earnings statement, haven't you? So look at line 8 on that retained earnings statement. How much is it? 131. All right. And line 4 is line 4, 161. Now go up to line 28. What have you got? Line 8 is 133. What's line 28? Well, I lost it. What is line 25? Line 25, top of your return.
Any of the years 97, 800, and years
133. So line 8 at the bottom of this form, that's match line 25. So we got a lot of blended in here on the back. So that's a corporate return. It is not that hard for most small corporations. They don't have a prorated retained earnings for paying expense or to retire bonds or something. It's all unappropriated. Okay, all I'm trying to tell you, corporations are not that hard. Preparing a corporate return is easier than reading about it. You got a lot of good reading to do between now and Thursday on all this section 351 stuff. What's the basis of your assets to put them in a corporation? I've always told you to start any business straight out if you can with cash. Buy your assets. Okay? You know their basis. You don't have to go back to somebody else's basis. Okay? But in case, we've got a lot of reading to do in chapter 2. I'm sure maybe one person here has read chapter 2, maybe 4 has not, maybe 5 will go by Thursday, and I'll see you then. Anybody out there watching this today, and you're in VITA, like Giorgio would be one in VITA, Tracy and Alex is not. Tanda's in VITA, she'll be here. There's still one more in here. Who's that 10th person? I keep.
Forgetting Savannah.
Oh, Savannah. Savannah, be here tomorrow night. I know you got a new job, but be here.